VingeGPT.com.
Welcome back, investors. Welcome to a new video. This time it's a company analysis again, and we'll be discussing, and I will try to share key insights that every investor should know actually about LVMH, so Louis Vuitton Moet Hennessy, which is the largest luxury group in the world. First things first, do not forget to subscribe to our YouTube channel so that you stay informed when we publish new videos. We're actually publishing now at a rhythm of once per week. I hope that those videos are interesting for you. Disclaimer as well, that's also important. So I'm a shareholder of LVMH. Actually, I'm a shareholder of Christian Dior International, which is the holding company that owns, amongst others, LVMH. So I just wanted to share that with you. Of course, that you are aware that, we will be discussing about the company, how I feel about the company, but I have to disclaim that I'm a shareholder since now, rough cut a year of Christian Dior International. Also, as always, do remember that investing into the stock market comes with a certain amount of risks. And my intention is to share in full transparency how I invest into the stock market and provide some kind of educational perspective on how I look at companies. And this is an example of a company as I'm doing now for LVMH. Another thing that I've been asked is actually the pictures that you see. I already said that very often I try not to do any copyright infringement, so I'm actually generating own pictures with Midjourney, and I just wanted to share here with you the picture that you see with this beautiful young lady on the left of the screen with the Champs-Élysées in the background. So that's actually a generative AI picture that has been generated with Midjourney, and I'm just sharing here the prompt in full transparency, which allowed me to generate this beautiful picture. So yeah, kudos to Midjourney. All right, so LVMH, let's go into the company. So probably most of you know a certain amount of the brands that are part of LVMH, and we'll be discussing that later on again. But for the US people, you probably know Tiffany's, Kenzo, Sephora, Christian Dior, for example, Celine, Bulgari as well from a diamonds perspective, then maybe Moët & Chandon as well from a champagne perspective, Guerlain, I think those are perfumes as well, Hennessy obviously also for the US people. So, but before, when we look at all those brands, I think it's important to understand where is LVMH actually coming from. And so I'm gonna start first with a brief history about LVMH. When we look at the history of LVMH, actually LVMH has been composed, or actually has been born out of two separate companies. The first company is called Louis Vuitton. You probably recognize the famous logo on the left-hand side. And then the other company was Moët & Chandon initially. And before the merger was actually Moet Hennessy, but I will cover that in a couple of seconds. So let's start with Louis Vuitton. With Moët & Chandon, my apologies. So with Moët & Chandon, so the company was established 1743 in France, in the Champagne region, which is like a little bit an hour east of Paris, and it was established in 1743 by Claude Moet. And in 1793, the grandson of the founder had the intention already to develop a commercial network in France and really starting going out of France and conquer markets outside of France, actually. What was interesting, and still today, for those who love Moët & Chandon champagne, you have the Moët & Chandon Impérial. So you do have an historical figure that is part of the history of Moët & Chandon, which is Napoleon Bonaparte, who has been the first consul of Paris, and afterwards he became actually the emperor of France. And so you may know a little bit about the history of Napoleon Bonaparte. And what is interesting, in 1801, it was the first order that was registered by Moët & Chandon related to Napoleon Bonaparte. And in 1869, to celebrate the centenary of Napoleon Bonaparte's birth, they actually created a champagne that is today still known as the Moët & Chandon Impérial, in fact. And there is one, I would say, interesting quote that according to the legend, Napoleon was always saying, he said for the champagne that in case of victory, I deserve it. In case of defeat, I need it. So I think that's that's part of the Moët & Chandon story. And 1971, actually Moët & Chandon merged with Hennessy Cognac. Then Louis Vuitton. So, if you look back here, so Moët & Chandon started 1743. Louis Vuitton started a little bit later, around mid of the 19th century, 1854, with the founder. Louis Vuitton founded in Paris, and he was actually a skilled trunk maker and packer. And you're gonna see this also coming up there are some pictures that I've been adding as well. And one of the things, so at that time, I would say the wealthy people of Paris and of France started to travel as well. And I mean, at a certain moment in time, end of the 19th century, you had the first cars appearing as well. And people needed luggage, actually. And this is where Louis Vuitton became, so either it was horse carriages and afterwards it was cars. Well, Louis Vuitton actually became famous because he created those still today, very famous luggage series that have specific attributes, like, for example, having an unpickable lock, for example. That was something that Louis Vuitton's son, George, actually presented as being a unique selling point for the business of Louis Vuitton. So, and throughout the years, up to 1914, Louis Vuitton actually built on the Champs-Élysées the first and the largest travel goods shop or store, and it was immediately supported and patronized by Paris fashion elite, including Coco Chanel, for example. And 1936, so George Vuitton dies. That was the son of Louis Vuitton, and was succeeded by Gaston Louis Vuitton. And then 1970, Gaston Louis also passes away and was succeeded by the son-in-law, Henri Racamier, and we will speak about Henri Racamier in the context of the merger as well. And in 1984, the company actually became a publicly traded company. Now, LVMH. So before the merger happened, so as I was showing you here in 1984, Louis Vuitton alone, not LVMH, but Louis Vuitton alone became a publicly traded company. And in the 1980s, you need to know a little bit the background, what was happening on the stock market. And you had what is called corporate raiders. So you had those type of people that were acting like a threat to companies in order to acquire those companies. It would be today called a hostile offering, actually. And both, I would say, CEOs at that time, so Chevalier for Moët Hennessy and Racamier. So if you remember Racamier, he was actually the son-in-law of Gaston Louis. So you see this is already fourth generation. So both were actually worried about those corporate raiders, and they came up both with the idea of merging both groups, so Moët Hennessy and Louis Vuitton together. And in 1987, actually, so they agreed, and the company became, so both companies merged into what is known today as LVMH. And at that time, so that you also have a sense what has happened afterwards since 1987, so we're speaking here rough cut about 40 years, a little bit more. So the group had what is called 10 maisons, so let's call them 10 big brands, 12,000 employees, and had an annual revenue turnover of around 3 billion euro. And at that moment in time, and I will not go into, so Bernard Arnault was present already. He became 1989 the CEO of LVMH and the majority shareholder. And there are some, let's say, polemical elements related to that. I will not go into that. But what is interesting from a business perspective is to see that since 1988, the company went on acquisition spree. So you probably know the Givenchy brands, other brands like Kenzo, Guerlain, Sephora, Hublot as well, Bulgari, and the latest one, the most famous one, has been actually Tiffany's. So this very big US jeweler that has been acquired in 2021 by LVMH. When we look at speaking about brands, I mean, you know that when I invest into the stock market, I like to invest into, if it is possible, top 100 brands that are undervalued by the market currently, because the market may be, let's say, emotional at a certain moment in time. When you look at the top 100 brands, so here I'm referring to the Interbrand Best Global Brand 2023 ranking. You actually see in the red dots, so those are, I've put you here all the frames, all the brands that are linked to luxury. So you see brands that are not linked to LVMH, like Hermes or Hermes Paris, Chanel, Cartier, Gucci, Prada. But you see with the red dots in the top 100 brands, you see that actually LVMH is pretty much present with brands like Louis Vuitton, Dior, Tiffany's, Hennessy, and Sephora as well. So if you compare with the other groups, like Hermes is strong brand, positioned ranked 23, not as strong as Louis Vuitton on brand ranking 14, but you have other brands like Gucci, for example, Prada, Cartier, which is part of the Richemont group. So all those big luxury groups are present with one brand actually. When you're precise, they're present with one brand. And the only exception is LVMH, that is present with 5 very strong brands in the top 100. So I think this is actually something that is remarkable of what LVMH was able to do. And that's why, as I said in the introduction, LVMH is the largest luxury group in the world today. So what you can, and you know that I'm always showing you how you can use VinGPT for doing that. So you see the video running on the right hand side. So I'm asking actually Vinj which brands we have related to LVMH, and I'm asking of course to structure the results in a comprehensive table. And you see actually on the video that of course, because we have trained VinGPT on this publicly available information, so you see actually that Vinj comes back with the 5 brands that have been mentioned. So you saw Louis Vuitton, Hennessy, you see as well Sephora and Tiffany. One thing that has been missing here in my prompt is I forgot to ask Vinj to prompt or to sort actually the results by brand position. So you see now Louis Vuitton, Dior, Tiffany, Hennessy, Sephora exactly as it is presented in the interbrand report. So just showing you here again, you can see it here, how it was correctly sorted. All right, so one thing that is interesting as well is, I mean, here I was specifically asking for the brands, but I mean, me as an investor, I like to look at moats, and I've been learning from Warren Buffett that one way of looking at moats is, for example, companies having a very strong ROIC, so return on invested capital, for more than, let's say, 8 to 10% during the last 5 years. But also I learned that a moat is when the company has very strong brands and customers are not willing to switch actually, and they're even willing to pay a premium for staying with the brand. And one of the things that you can do inside Vinj actually is that you can ask what is called a level 3 analysis, and that's part of the training that we give on Udemy about the art of value investing. But it's to perform a level 3 analysis, and you get, amongst others, the net promoter score, so that's a marketing metric, and you get as well the employee net promoter score, so the ENPS. And when you look on the right hand side, you actually see that the net promoter score of LVMH is pretty high with 39. That information is updated from August 2024, so that's pretty recent, a couple of weeks ago. And you see that the customer satisfaction is high, the customer loyalty is high, and also the employees, I mean, for those who are providing feedback to websites like Glassdoor, Comparably, etc. So they have a high CEO approval rate, and so the employee net promoter score is 28. Well, that's pretty positive actually. So of course, what I wanted to know as well is I asked Vinj, can you retrieve the NPS and ENPS scores for all luxury industry companies? You see the prompt here on the left-hand side. And can you provide the results, of course, again, in a structured table? This is what I'm asking. So you see here that Vinj actually takes a little bit more time, because when I ask for all luxury industry companies, it has to fetch the data for all luxury companies that it knows. So it has to go into the Kering data, into the Hermes data, into the Richemont data, probably Prada as well. And of course LVMH, and here you see the results coming. Oh yeah, I forgot Burberry as part of that as well. And you see here the results. So I just asked NPS and ENPS, and just look at, oh my apologies, the video just came back, rewind it. So just look at, for example, the scores of if it is Christian Dior and also LVMH, because they are mentioned as separate brands as well. But you see that they have pretty positive results. You see that Kering, I'm also a shareholder of Kering. The net promoter score is a little bit negative for the time being, -3, but the employee net promoter score is the highest with 40. And you have, for example, Burberry, where the net promoter score, so the market, so the customer sentiment is okay, it's positive, 32, but the employee net promoter score is pretty negative at -9. That's never good actually, when employees are not very happy inside the company. I always say that you need to have happy customers and happy employees actually when you run a company. All right, so that was like looking first at the history of LVMH and where LVMH stands today in terms of brand strength. So let's look now at the financials. So what is pretty interesting, I've put you here the graph which shows that the LVMH stock has lost a lot, let's say rough cut 25%, 20% in a couple of months. And I'm showing you here the latest updates. So that's from yesterday's Wall Street closing. So the stock, an LVMH stock, went down to $681.05 US per share. You can see on the graph actually that the highest valuation was around $1,000 US per share. So that's rough cut a third that the company has lost in terms of market capitalization. And before we go specifically into the financials of LVMH, I think it's also important to understand that we understand the industry, actually, the luxury industry. And you can prompt Vinci, and you see here the prompts, which is, Vinci, can you tell me about the luxury industry? And you see actually here, let me just scroll down and then stop the video here. You see actually that Vinci can provide you interesting information like, for those who are a little bit more industry investors and not just stock picking investors, you have concentration ratios. You see that the C2 and C4 concentration ratios are actually very high. So that means that there are only a couple of companies in that industry. And that's actually true. Today, there has been since the last, let's say even 20 years, a very strong consolidation of the luxury industry. So you have companies like Richemont, Kering, LVMH, and Hermes as well. Those are actually the very big four, and this is what the C4 concentration ratio shows. So those four companies, they own 88% of the market, of the luxury market worldwide, which is huge. What is interesting as well is already here you see that the ROIC, I think that was a little bit early in the video, you see that the ROIC of the industry is pretty high. So you have an average 10% ROIC, whatever company is in the luxury industry, so the average is pretty high. The debt to equity ratio is pretty low, so that's also interesting because those companies do not need a lot of leverage, and that's always, I like to have companies that have very low debt to equity ratios. I always like to have this below 1.5. And also what is interesting, when you ask Vinci about the industry information, it will provide information like technology disruption risk, network effect. So here you see that the technology disruption risk is actually pretty low on luxury, which is true, which is, for example, the technology disruption risk is actually very high, for example, in the banking sector today. Right. Moving forward, so looking at the industry specifically, and I just wanted to share with you the book here that I have, which is called, you probably see it here, Future Luxe. I don't know how exactly to spell it, that it has been written by Erwan Ramberg. So he is an analyst in the luxury world, and he's actually been working in the luxury world for rough cut, I don't remember, 10, 15 years before turning to become a financial analyst specifically on the luxury. The book is pretty interesting, so I'm just sharing you, for example, here one of the pyramids, which is called the Mars Lux pyramid, where you see, in fact, the different types of luxury, let's say, I will use the term segments. It's maybe not the right term, but segments, where you have, for example, everyday luxury, where you could even potentially include Starbucks as being everyday luxury. But some people will include designer fragrances. Some people will include, for example, champagne. When you look at a Moët Chandon Impérial, you probably are between $50 and $100 a bottle, most probably. So that's still affordable luxury, right? But then when you go up, you go to ultra high-end like Leviev and Grave. Just go on their websites and look at the cost of a necklace, for example. You are immediately at cost of $100 to $100,000 for a piece of jewelry, right? And then you have like the super premium below, and what is interesting here, I will not go through all of them. In red, you have actually the positioning of specific brands of LVMH in the pyramid. So you see they are actually pretty high, highly positioned. And in green, the green dots is where in this pyramid the brand is not mentioned, but LVMH has brands that are in designer accessories and apparel, designer eyewear probably as well, I'm not sure, but for sure designer fragrances and also spirits and champagne. So that's the type of thing where you see actually that LVMH is everywhere and serving different types of customers with different budgets of customers in the luxury pyramid. Right. One thing also to understand luxury today, we need to understand what are the forces that are driving luxury. And again, this is something that also is being discussed here in this book of Erwan Ramberg. And I've just picked out three, which I believe today are the three most important forces that are driving luxury. The first one is that, people who buy Louis Vuitton stuff, who buy even Gucci stuff, even speaking outside of LVMH, This is what I call the luxury anonymous consumers. And they want society, they want people, when they walk on the street, they want to be recognized because they're anonymous. I mean, it could be a famous YouTuber, but I mean, if, I don't know, I'm just saying my wife or myself, I'm walking on the street and I have no clue who that person is. Well, those people want to show up that by wearing very luxury, if it is fashion or apparel, those type of things, or accessories, that they can show to the society that they have succeeded, in fact. So that's one type of, and I mean, you have a lot of YouTubers and influencers that are exactly part of that category of what I call luxury anonymous consumers. The second one, which is an interesting one, and this is linked to demographics, is what is called womanomics or womanomics. So that's a contraction of women and economics, because actually women today influence, I mean, if you look in a household, I mean, they influence a lot and the majority of the spending decisions, and their influence will grow stronger, and there are some reasons for that. The first reason is that you have more women working, and I'm not judging if that's positive or negative. It's just a fact. From a statistical perspective, it's a fact that more women are working, and they're working also for higher wages. We still have, unfortunately, there are differences, and so there is a gap between men and women, which I clearly believe that's unfair. But I believe that, so what you clearly see is that women are earning more and more, and hopefully in the future they will earn at least as much as men, so that really there is no longer actually a pay gap, and a lot of people are working on that. And also, I mean, I mentioned from a demographic perspective, you have women actually, or even I would say couples in general, are marrying at a later stage. So women go into the work environment and they work with higher wages, which is great for them, but they don't marry as soon or as early as, for example, 20 years ago, which gives them actually time and space to spend their money on stuff. I mean, it can be investing into building their wealth, and that's another thing. One of our founders, Stephanie, is very interested also in making sure that also women, because women actually do underinvest into stock markets, for example, compared to men. And I believe that stock markets, if correctly invested, you can actually build up your wealth, and I hope that I'm an example of that as well. But the fact is that women, and I like the slogan, for me, from me, which basically means that I'm buying something for me, but actually I'm paying it by myself, by my salary. So this contraction of women and economics, what is called womenomics, so that's definitely something that is also a driving force for luxury. So you need to understand that as well. And then the third, which is probably not a surprise for you, it's about Asia. So Asia has actually, I mean, you probably know that most, and I'm going to show this to you specifically on LVMH, where the revenues are coming from, that Asia is actually contributing over the next 10 years to 55% of the global growth. That's just also linked to, I mean, there are a couple of attributes linked to that. It's demographic. I mean, in Europe and the US, demographies, even in Japan, are going down a little bit. India, China, I mean, China still also has a problem, but not as strong as Japan, for example. But India is growing a lot, and you have also Africa that we hope that also in the upcoming years will take its share of contribution in terms of if it is higher wages, economic development, etc. But what is clear is that the incomes in Asia have seen a sharp rise over the last decade, and this will continue. And we expect, and statistics or economical people are expecting that by 2030, the Asian middle class will represent 3.5 billion people from a rough cut 1.5 billion in 2015. So that's purchasing power specifically for the luxury sector, for the luxury industry. Right. One thing that is also interesting from a macro, let's say, cycle perspective, and I'm quoting here something that I've taken from the book Future Lux from Erwan Rambach, but he was actually quoting Bernard Arnault, and Bernard Arnault apparently quoted that statistically that over a 10-year period, if that would be a macro cycle in the luxury industry, you're going to have 7 great years, you're going to have 2 years which are like so-so, and you're going to have 1 year linked to recession which will not be great. So of course you are probably wondering if that is now the year, if 2025 is the recession year, because not later than yesterday in the US, there was a statistic about the labor market, and it's actually not good at all. Actually, the US economy, I mean, really did not create a lot of jobs over the last, I think it was the last month of the last quarter. So people are worried about a potential recession, and you're going to see very probably, again, I'm not making forecasts, but very probably there's going to be a tendency from the US Federal Reserve and from European central banks just to reduce the interest rates in the short-term future. Right, looking at the financials, LVMH, let's look at the figures. So this is coming from the last quarterly report. You see that actually when you pay attention to the red bullet, so you see that Asia together with Japan represent 39% of global revenues of LVMH. And when you look at revenues, it's also interesting to see that, and here I'm splitting between revenues and profitability, that you see that so this is the first half of 2024. So they generated rough cut 41.6 billion of revenue just for half a year. Remember that when they merged, it was like 3 billion of annual revenue. So you see the size that LVMH took. What is interesting to see is that 50% of the global revenue, so the top line of LVMH, is coming from fashion and leather goods. And even, I would say, a stronger figure linked to fashion and leather goods is a profitability. You see it here on the bullet point number 2 and on the bottom table, is that 75% or even 80% of the profits of LVMH, at least in the first semester, and last year it was pretty similar, are coming from fashion and leather goods segment, let's call it like this, or business group as they call it. So this is very interesting. And I mean, when we look at fashion and leather accessories, so obviously we come across those brands like Louis Vuitton, Christian Dior, Celine, Loewe, Kenzo, Givenchy, Fendi, etc. So I will not go through all of them. But those are the ones that are driving, again, coming back here to the stats, those are the ones that are driving the profitability of the company. And of course, in terms of, well, when you look at the growth, I mean, some people are getting nervous a little bit about LVMH because, I mean, you see that the growth is stagnating. And this could be a signal also of recession, for example, specifically in Asia. So, but nonetheless, I think what is important, of course, to understand, I've put you here the Vinci prompts as well, is that to look at the evolution, because what we want to know is what is one share of LVMH actually worth. And I've asked Vinci, you have the prompts here, can you show me the evolution of the revenues for the company and the net income? I want to have both, so the top line and the bottom line, between 2020 and 2024, so up to August 2024, which are the latest figures that we have. And you see actually that the growth, I mean, the growth has been there, if it is on top line, but also on bottom line. But you see that it starts to flatten out a little bit. But still, when you calculate the compound annual growth rate, I mean, you are beyond the 10% compound annual growth rate, which is a figure that we will reuse afterwards to some extent when we're going to do the intrinsic valuation. Right. One thing as well that is important, something I learned from Warren Buffett, is to look at the profitability in terms of return on invested capital. So how good is the company at employing invested capital? And so the prompt is show me, so I ask Vin, show me the ROIC evolution of LVMH from 2020 until August 2024. And you see here that the ROIC has been systematically above 10%. And now you see that it's coming down a little bit. So maybe the company has been investing more for the future. I know that the Tiffany's acquisition also had I mean, they had to spend a lot of money on that. So, but the ROIC is still very, very healthy, right? So that's definitely something that we need to consider when we look at also the share price of LVMH. Those are relative valuation metrics that I like to look as well. Those are part of the level 1, which is basically, I asked just Vinci, provide me the price to earnings, price to cash flow, and debt to equity for the company specifically. Remember, we discussed debt to equity earlier for the industry, but here I want to look specifically at LVMH group. And you see actually that the price to earnings is coming down in the sense that, and this is normal, if the earnings remain stable or even the earnings growth and the share price is coming down, obviously the price to earnings ratio is getting lower and lower. And actually yesterday, I think the current PE is at 21, if I'm not mistaken. Price to cash flow is the same, and debt to equity is very, very healthy at 0.4. So if the financial figures of the company are correct, well, they have a pretty healthy balance sheet with a debt to equity ratio of 0.4. So this is what you have again here, the prompts that you can use within Vinci as examples. Remember that you don't have to exactly use those prompts, but just to give you examples how to write prompts in Vinci. And then one of the things that is part of my level 1 analysis, so the first fundamental screens, is looking, of course, at the modes, at the valuation metrics. So you see here the PE, it was 21, so it is currently 21.72. Price to free cash flow is 25. ROIC is pretty high. Return on assets is very okay. Debt to equity, we saw that is very okay as well. There is maybe one thing that, as a value investor, maybe you would like to have a little bit higher, is the dividend yield. So the dividend yield currently, if you would buy a share of LVMH today, is only 2.02% pre-tax. And the payout ratio is 46.53%, which makes the payout ratio sustainable on dividends. I do not believe that the company will have any issue to keep the amount of dividends being paid out, because they have still a safety margin of 54%, to make it simple, on their earnings currently. So that's a pretty reasonable margin of safety on the payout ratio. And then, I mean, that's what investors like to know very often is, I call this always the holy grail, is what is the intrinsic value of the company? What is one share actually worth? So I always benchmark first with Morningstar. So when you look at Morningstar, they basically say that a fair value is around $772. So they believe that currently the company is fairly valued. This is when I took the screenshot. I took it on September 5th. So in the meantime, at that time, the share price was 687. So it went down a little bit. And they consider that the range of very expensive is above $1,000 a share, and very cheap is below 522. This is what they call the 5-star price. So let's use Vinci and ask Vinci, calculate me the intrinsic value. So we'll not go into the details of it. You have to do the training for that. But Vinci calculates 3 intrinsic values. I'm speaking about absolute valuation methods. And so this is part of the level 2 analysis. So you have the dividend discount model. Obviously, dividends being so low, the intrinsic value on the DDM is only $200. But the ones that are mostly used are discounted cash flow and discounted future earnings. And there actually Vinci is stating that the intrinsic value, according to its calculation, is $474 and $549 between DCF and discounted future earnings. But again, always remember that in order to do that calculation, the prompt I asked Vinci, I did not specify growth rate, I did not specify cost of capital, I didn't specify the amount of years. So per default, Vinci, and I already mentioned this in other videos, per default, Vinci uses 3% growth rate, 7% cost of capital, and 30 years valuation. Of course, as a serious investor, before going into what are the right assumptions, you see that actually Morningstar considers that the 5-star price is around 522. So we are actually, that's the disadvantage of Morningstar. It does not tell you which assumptions it is using, but it considers the company to be cheap at 522. And I can kind of, with those assumptions of 3% growth rate, 7% cost of capital, 30 years valuation, I could agree to that. Right, but again, as serious investors, and I will run the video here, I mean, we want to be a little bit more precise. We want to know what is the cost of capital. We want to risk adjust our cost of capital. And we're going to ask Vinci, what is the appropriate cost of capital for LVMH? And what Vinci does, of course, we have trained Vinci for that. It looks up in which industry LVMH is part of. That's why you see actually twice talk to Vinci GPT-3. Then it goes into the industry database and fetches the cost of capital, which is of 9.82%. So we are using Aswat and Modaran's database for that. And of course, now what we're going to do, we're going to recalculate the intrinsic values considering this cost of capital. That is more appropriate than the 7% default cost of capital. And we're going to apply as well and I was a little bit, let's say, reluctant on putting 17% compounded annual growth rate. I just asked for 10% growth rate. And you're going to see actually what is the intrinsic value with that recalculation, with those new assumptions. I did not change, so it's still 30 years. So you see actually that a share of LVMH is worth $824 on discounted cash flow and 956 on discounted future earnings. And of course, DDM went down because DDM is influenced by the discount rate. So as we have so the denominator has been growing. Of course, we are dividing the same amount of cash dividends by a higher discount rate. So of course, the DDM is going down. So when I was recording the video at that time, it was not still having so it was like 2 days ago. So at that time, actually, I just pinged Vinge and I said, okay, actually today the share price is around 690. Can you analyze what is your opinion about it? And basically and you see that it always comes back to the assumption that you're using, like the 3%, the 7% discount rate, the 30 years valuation. And of course, you need to be intelligent as an investor and to judge by yourself. That's why also my training is called The Art of Value Investing. You need to judge by yourself what makes sense, in fact, related to the assumption that you're using to calculate the intrinsic value, because you need to do some type of forecasting for the future. Right, wrapping up here. So what can we conclude about this analysis of LVMH? So I honestly believe, and otherwise, again, disclaimer, coming back to my disclaimer, I'm a shareholder of LVMH. I'm a shareholder of Kering. I like luxury because I believe that luxury has strong moats. And LVMH, being the largest company in the world, is a great company, has a very wide moat. You have seen that in the top 100 brands, it has 5 brands that are part of the top 100. And in the luxury brand specifically, it's the only company that has 5 out of, luxury has like 10. I'm not speaking now cars, luxury cars, but when you look at the top 100 brands that Interbrand is publishing every year, from the 100 brands, you have rough cut 10 brands that are luxury related. And from those 10, 5 are linked to LVMH. So I believe that shows that the company has very strong moat and the brand valuation is actually growing year over year. You have seen that the industry is very concentrated. That was the C4 and even C2 concentration ratio. And obviously LVMH is by a mile the largest group in the world. I think that the competitors, I don't have now the figures in front of me, but I believe that the competitors, they have a revenue of around 20 billion if it is Kering, Hermes and Richemont. And LVMH has a rough cut, a little bit more than 85 billion US dollars of revenue per year. So you see that they are like 3-4 times bigger than their second largest competitor. The fundamentals look safe, and you could argue indeed that maybe on the dividend you would like to have and I would like maybe to have a higher dividend yield. I can live with that for the time being as a shareholder. And I must say, I will probably continue doing cost averaging because I believe that the company is a very strong company with very, very strong and remarkable brands. With that, thanks for attention. Hope it was useful. Hope it was also, from an education perspective, was an interesting content that together with the team we were able to share with you, and talk to you in the next one. Thank you very much.